We want to get more on Eunice's mention of the global supply chain and then the likely consumer impact. Joining us is Brett Rose. He is the CEO of United National Consumer Suppliers. It's a company that helps manufacturers deliver overstocks through ports around the world. Brett, thank you so much for joining us. Eunice made a number of points, but right there at the end, she talked about how we're already very constrained, very congested in the world when it comes to shipping because of a variety of factors. So add in this new Delta variant causing a disruption at a port that handles a quarter of the goods that are shipped from China to the United States. I mean, how bad is it? Can you quantify that for us?
Yeah, so we look at this on a daily basis, and this isn't going to just affect the mall down the street. This is going to trickle down to Wall Street. There's no good timing for another variant, right? But from a supply chain standpoint, the timing is horrible. You have a tremendously strained supply chain from the original closures back in March all the way through to the recent closures in India, coupled with a current 3 to 4x shipping rate on containers out of China. Fuel cost up here, the timing is horrific. It's going to cause massive delays in the supply chain and really going to have a tremendous economic effect here.
Mike, a lot of people, well, I shouldn't say a lot of people. There are people that think this supply chain's problem take care of themselves relatively quickly. I think nothing can be sort of further from the truth. Can you speak to how long these things take to sort of sort themselves out?
Yeah, we're north of 12 months off of the beginning of the closure, right? And we're already still seeing, I should say, major delays on everything from fitness equipment to, people weren't panic buying toilet paper. People were panic buying everything. So consumerism is at an all-time high, in our lifetime, and there's not enough product to meet the demand. So, these effects are here for quite a while. You're going to see this continue Q3 all the way through Q4 and definitely that's our biggest shopping season.
Brett, I want to sneak in one more before we have to let you go. I mean, you're talking about the demand for products, but what does it mean for the prices that consumers ultimately pay? This has to be a costly endeavor for companies that are looking to import anything if you're talking about rerouting or extending the time. So ultimately, are we going to pay more? And if so, when and on what products?
Yeah, by about Q3, you're going to start to see everything across the board go up. Fitness equipment's up 15% because of the cost of steel. Currency fluctuations. The retailer can only withstand so much before it starts to trickle down on the street and affect the pricing. And it's either going to affect the pricing to the consumer or their stock price is going to take a serious hit. And I think we all know how that's going to go.
Brett Rose, thank you very much for joining us here today. It's been good to speak with you again. All right, Karen, so if this is going to have an impact on the prices that consumers pay, even though we seem so strong as a consumer right now in the United States, what does that mean for how you play some of these stocks?
So I think about when you have these kind of shortages, it's very difficult to get your goods here. Who has the most juice in that game? The Walmarts of the world, right? The Amazons of the world, the Targets of the world. So for my retail exposure, that's where I want to be. They've been able to weather it the best. I would assume they have the most clout in negotiating. They're going to get the goods first. They also are the biggest, and so they have scale, which allows them to maybe absorb a little bit of that price increase. So that's how I would play it. That's how I am long Walmart, long Target, long Amazon.
Well, speaking of Amazon, Guy, what do you think that means, say, for Prime Day coming up? That's a big online shopping holiday for everyone but you, because I know you don't buy anything online. Last we talked, I don't think you'd ever made an online purchase. But if you are a normal person in America and you are shopping perhaps on Prime Day on Amazon or otherwise, what does that mean for the prices you're willing to pay or the access to goods that you'll have?
Well, I think that, first of all, thank you for pointing it out, because that is true. I am definitely not a normal person. And I don't think listen, I think people are willing to pay up. I think what we've learned is people are willing to pay up for their goods. And if it takes an extra day, so be it. But that speaks to the bigger problem that I see and other people think is maybe just temporary. It's inflation all around us, and we're just having a conversation about exactly that. So this story, I don't think it necessarily affects Amazon. I think Karen makes a great point. By the way, Tim and Dan will tell you that Amazon has basically traded sideways since July, August of last year. The stock has gone nowhere, which I think is somewhat interesting as well. But to me, it speaks to a bigger problem, the problem being the inflationary pressures that, whether we acknowledge or not, are there.
Guy, this is the definition of transitory. I mean, like literally, and also what it does for all those inflation hawks, it actually throws a monkey wrench into the whole idea that the Fed is going to have to combat this inflation by raising interest rates. They're actually going to have to do the exact opposite if the consumer is getting pinched here. But I'd also make the argument, while we still have expanded unemployment benefits, there's still a lot of liquidity in the system. We have consumer balance sheets in great place, here to kind of offset some of these transitory price increases. So to me, I just don't really buy it. I mean, I think Courtney said it before, these things tend to work themselves out over time here, and we don't know how long this will last. But I will also say that if it were to last longer than expected, this is the issue in China in the ports here, it just gives the Fed that much more cover to remain dovish.
Shepard Smith here. Thanks for watching CNBC on YouTube.